RKT. We entitled this project, this class is Get Rich Slow Scheme. For all the new listeners out here, every Friday is a free Friday class. Do know that we do deep dives every single day. If you're interested for our deep dives, go enter awesome10x.com and check out all of our offerings for you. It's 2,000 pesos per month or $40 per month. You get access to our library of deep dives with IPOs, existing great companies. Our assurance is that we only choose awesome 10x names, as in 10x returns, 1,000% moves. So let's see. Rocket Loans said that it's get rich slow scheme. So how could it be a 10x name if it's a get rich slow scheme? The company is Detroit. It is a Detroit-based holding company consisting of personal finance, consumer service brands, including Rocket Mortgage, Rocket Homes, Rocket Loans, Rocket Auto, Rock Central, Amrock, Core Digital Media, Rock Connections, Lendesk, and Edison Financial. Since 1985, that means it's 35 years already, Rocket Companies has been obsessed with helping its clients achieve the American dream of home ownership and financial freedom. Companies offers an industry-leading client experience powered our simple, fast, trusted digital solutions. Rocket Companies today has 20,000 employees, team members across the United States. Its flagship company, Rocket Mortgage, has been named Fortune magazine's list of 100 best companies to work for 17 consecutive years. So we're happy to say that Rocket Company finally made an IPO after 35 years. And that is a company that just listed on August 6, 2020. This company has been known in the mortgage industry. We changed the mortgage industry. People notice. NerdWallet said Rocket Mortgages document and asset retrieval capabilities alone can save you a bunch of time and hassle. New York Times said progress towards moving the entire mortgage approval process online made an apparent leap forward with the introduction of Quicken Loans Rocket Mortgage. TechCrunch said that Rocket Mortgage is more than just an online application. This service also verifies information, provides a conditional approval as valid as something a loan officer would issue. It had the highest in customer satisfaction in the US, said by JD Power. 10 consecutive years, they won primary mortgage origination, 7 consecutive years primary mortgage servicing. So we love leaders, we love customer satisfaction ratings. So as you could see, in just a quick note, Rocket Companies has a lot. Rocket Mortgage is their flagship home platform. They've got product extensions, Rocket Auto, Rocket Loans, and then they've got a geographic expansion, Lendesk, and Edison Financial. So you could see that they do home financing, home sale, auto purchase, personal financing, and client services. Let's read it. Rocket Company said at Rocket Mortgage, it's a mortgage originator, servicer, providing clients with an end-to-end digital mortgage experience. Amrock, streamlining the real estate experience for lenders, property owners, and real estate professionals worldwide. Now, in terms of home sale and home search, Rocket Homes is a seamless, fully integrated home buying and selling experience via a real estate agent network and home search site. Now, for sale by owner empowers sellers and buyers with the resources they need to sell or buy properties directly. Auto Purchase Rocket Auto is a platform assisting companies to close their used cars using a centralized process. Personal financing means Rocket Loans can do digital personal lending businesses focused on unsecured loans. Client Services, Rock Connections is a sales and support organization for Rocket and third party that makes interactions between brands and consumers more effective. Lower My Bills, Core Digital Media. So the company actually just recently, you will see that after post-IPO volatility, National Association of Realtors reported sales of existing homes soaring 25% since July. So people are engaging again with the housing market. The housing market is well past the recovery phase. It is now booming with higher home sales compared to pre-pandemic days, said Lawrence Yun, NAR's chief economist. With the sizable shift in remote work, current homeowners are looking for larger homes, and this will lead to a secondary level of demand even into 2021. Rocket Companies, which is the parent company of Quicken Loans and Rocket Mortgage, made its public debut on August 6th. This ties in with what Palihipitia. Chamath, the VC, launched his IPOB as Open Door, which was real estate buying and selling. Actually, you'll notice that SPAC went $19 so far. And it just tells you that there's bullishness, just like how Airbnb was saying that since July, Airbnb's rental services was also picking up. So we are seeing that Rocket Mortgages, Rocket Companies, all these IPOBs, aka Open Door, is saying the same thing. The industry and the real estate is going past the recovery phase. It's now even booming. What are the things that are important for me when I read into the filings or listened and a lot of videos? Rocket Loans is the largest employer of Detroit, but most importantly, they are the largest minority employer of Detroit. So Black Lives Matter is something that they take into consideration, so much so that they are really the largest. They are the largest mortgage lender in America. They are not a newbie. They're not a startup. They are 35 years already in the market with a 9% market share with goals of 25% market share in 10 years' time. They have record profits and they can provide dividends. They've got 20,000 people working and they believe that it's the best time to do an IPO to help all their existing employees, especially in a pandemic, given that their company is doing well with record profits and a lot of people are refinancing their homes. So let's see. They said themselves that this is a get rich slow scheme. We seek to execute for the long term. When you think about mortgage, you think about the subprime loans. The reason why Rocket Mortgage never had to endure what happened to Freddie Mac and Fannie Mae is because they never really assumed risk right from the beginning. So they became large and large because they were prudent and they never really went into complex sub-derivatives and so forth. They say themselves, we seek to execute for the long term. Rocket Mortgage took 3 years to get right because we refused to bring an inferior product to the market. Rocket Mortgage is something new since 2017, and I'll discuss Rocket Mortgage. We saw a need and we knew what it would take to revolutionize the industry. We will never settle for just good enough to garner publicity or meet arbitrary deadlines. We love complex markets with complex problems, and we have a team of 20,000 people who already have a track record making the complex simple. How do we buy a home using Rocket Mortgage Quicken Loans? Let's try to watch this. Why don't we? 2 minutes.
Welcome to Rocket Mortgage by Quicken Loans, the world's first completely online way to purchase a home. Now, before we get into the details of how Rocket Mortgage works, let's talk about the two big questions all home buyers ask themselves. How much house can I afford? And how much will my monthly payment be? You can get some estimates, but they're not always accurate because they're built on a lot of assumptions. Rocket Mortgage is different. It gives you a real, accurate, and personalized mortgage solution based on your unique financial situation. In other words, you get a lot more than just an estimate or teaser rate. And with Rocket Mortgage, there are no hidden fees or hassles. You can confidently know how much you can afford and what your payment will be without jumping through hoops. Here's how. You start your Rocket Mortgage process simply by creating an account. Just pop in your name, email, username, and password, and you're on your way. Next, you'll answer a few simple questions about your personal situation, like where you live now and the amount of your current monthly rent or mortgage payment. Here's another way Rocket Mortgage simplifies your mortgage process. Instead of you having to track down your bank statements and manually enter the info, Rocket Mortgage does it for you. It integrates with your bank digitally, so there's no paperwork. This fast, easy process saves you time and gives you a more accurate mortgage solution. Plus, by verifying your info now, you can speed up the rest of the mortgage process. With a complete picture of both your income and assets, Rocket Mortgage gives you an accurate solution based on your unique financial situation. Next, you'll answer a few questions from Uncle Sam. Here's why this step is necessary. Rocket Mortgage conforms to all industry guidelines, which means you get the confidence that comes with a real mortgage solution, not just a teaser rate or an estimate like you get from a mortgage calculator. Okay, now we're getting to the home stretch. The next thing Rocket does is securely review your credit to make sure you're qualified, and then you've got an intelligent, accurate mortgage solution that's customized specifically for you. Oh, and if everything isn't exactly the way you want it, you can adjust your down payment or change your term to find the solution that works best. Now, all you have to do is download your custom online approval letter to start shopping for your new home. Or you can put in an offer on a home you've already found. One last thing, if you ever get stuck or have a question, you can always chat online with a home loan expert who is specially trained to guide you through the entire Rocket Mortgage process with ease. That's it. All that's left is to push button, get mortgage.
Hi guys. So usually when you think about mortgage, the only thing I remember is Monopoly. I need to mortgage.
Welcome to Rocket
Mortgage New York because I lack money. But typically people do have to buy a home, and that dream, American dream of owning a home, is made feasible by Rocket Mortgage. Let me show you more videos. Actually, the owner of Rocket Loans, Rocket Mortgage, is none other than Dan Gilbert, chairman and founder. Yes, he gave his first public speech since stroke. You can actually watch it. That's one of the videos that we want you to watch. But let me just give you more about the process of what Quicken Loans does as well. Let's see. Watch this. 2 minutes, 30 seconds.
At Quicken Loans, we're always looking to make the mortgage experience better for you and your clients. That's why we've reinvented the approval process. Introducing the power buying process from Quicken Loans. You can be confident your client's loan will close. We underwrite your client's income, assets, and credit in less than 24 hours, giving them a verified approval and the power of a cash buyer. It's the latest innovation from America's largest mortgage lender. To get started, go to realestate.quickenloans.com.
So they also do a lot of real estate underwriting. Wait up.
At Quicken Loans, we're always looking to make the mortgage experience better.
So let's see why it has been surging recently. Rocket Company's share surge on Realtor.com partnership and very strong housing data. Shares traded 70% yesterday after the company inked a new deal with popular real estate listings platform Realtor.com. What happened? Home buyers shopping on Realtor.com will now see advertising from Rocket Mortgage for pre-approved mortgages. The ads will allow Realtor.com users to connect directly to a Rocket Mortgage application, according to Inman. Why is this so important? Rocket shares have been on a bumpy ride since its August IPO, but investors were very bullish on this Realtor.com deal. Rocket subsidiary Quicken Loans is leaning into an extremely strong 2020 housing market. In early September, the company reported $3.5 billion second quarter profit on revenues of more than $5 billion. The loan origination volume was a record $72 billion for the quarter, up 126% from a year ago. The housing market has been booming since the Federal Reserve cut interest rates to near zero back in March to stimulate the economy. On Wednesday, the National Association of Realtors reported an 8% monthly increase in pending home sales in the month of August. What's next? Investors will be watching how the housing market might stay hot in the fourth quarter and if the Realtor.com deal has any significant impact on Rocket's numbers. We are in a state of affairs in lots of areas of the nation. The place stock is low, houses are promoting in days. So for a shopper to have the ability to discover a dwelling, get a verified approval, get that data day or nighttime to their agent, make a seamless supply, it is totally vital, said Jay Farner, the CEO of Rocket Companies. This is actually a very good video. It's an agent update. It's a current state of real estate by Quicken Loans from a guy with 25 years of experience. It's 25 minutes. Only when we have time, I will show that to you. But you can also watch that yourself. Also, Americans are aware that there is a CARES Act. The CARES Act is the Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act. This is something in the Philippines you call the Bayanihan Recovery Act. So it's a $2.2 trillion economic stimulus bill passed by the president to the 116th US Congress, signed into law. This is a response to the COVID pandemic. They also discussed what you could do to refinance your loans with Quicken Loans. So a lot of Americans save money refinancing, and the middleman for all of that is Rocket Loans, RKT. Your success is our focus. Take a look what happens. I know this is just an infomercial, but a lot of real estate agents love Quicken Loans. Reason being, whenever you buy a home, chances are you're not paying 100% of that in cash. Not a lot of Americans have 100% cash. So what they'll do is they are going to loan it, and they're going to have a mortgage with that collateral with the house. It's going to be a 30-year collateral or 20-year collateral. Watch this. 30 seconds.
Today, I'm breaking the no phones rule during pizza night with my sister and her kids. Luckily, the other real estate agent in the room is the only one who notices.
Your dedicated agent relationship manager helps put time back on your schedule. What will you do with it?
Essentially, Quicken Loans is loved by real estate. In fact, just a month ago, we saw 100,000 new loans approved because it is a scalable tech platform. Rocket Loans, personal loans review, they also do these. So let's say you want to get a credit borrowing and you want to know the fast funding time. You want to know the credit score that you have, how much interest rate should you pay for your loans. So let's see. Rocket Loans is a sister company of Quicken Loans. It's an online lender based in Detroit. So it already tells you that. You've got competitive annual percentage rates, APRs. And the company does charge an origination fee, meaning did this loan come from this bank or did it originate from us? Are you refinancing this loan? But before you decide on taking a loan, given the interest rates are so low, if you're going to buy a bank, what are the pros of Rocket Loans versus the rest? The pros are same-day funding available, pre-qualification option. The cons are it's just for individual applications. Of course, they would charge an origination fee and limited repayment terms. Pros, so you have a rate discount if you are going auto pay. If you choose to make automatic payments, you can get a 0.03% rate discount. The cons are Rocket Loans will only offer terms of just 36 or 60 months. The charges would be from about 1 to 6% deducted from loan proceeds if you don't have an origination fee. And then, of course, it's only for individuals, no joint applications. Types of personal loans given. Okay, there are these funds. Oops, sorry, let's go. Type of personal loans, it's usually auto repair, vacation expense, medical bill, debt consolidation, home improvement projects, and you can't use it as a student loan, and you can't use it, of course, for some illegal activities. The loan amounts would range from $2,000 to $45,000. That initial personal loan will depend on your credit history, your income, and your debts. And then, of course, you'll get an annual percentage fixed interest rate ranging from 7% to the maximum ceiling rate of 30%. The lowest APR in this range will assume that you will enroll in autopay. There are also an origination fee that is separate from the advertised APR. You can even lower that now given the refinancing with rates at zero said by the Federal Interest Rate Reserve. So they can offer 36 or 60-month terms. Credit score requirements are needed. So it's kind of like applying for your loan. So you need to get a minimum credit score of 580. Keep in mind, if you have a higher APR, you can get qualified for a low interest rate. So the great credit scores can achieve an offering of about 7% APR, annual percentage rate, and you can even get a lower origination fee to borrow $10,000. That would mean that you'll get 7 plus 3 or 10% a year. That means that you'll only pay $1,000. In contrast, someone qualifying could be paying at least 12% and so forth. So they don't charge a prepayment penalty. You can make extra payments or pay off your loan early without incurring additional charges. It does charge an origination fee of 1% to 6%, which is deducted from your loan balance before being disbursed to you. There's also a $15 late fee after a 10-day grace period. Personal loan features its 1 day, same day funding available via their cash transfers on the same day. They've got auto pay discounts, so that's one of the things that people love about them. So you can apply a personal loan, check it out, check your promissory scores, your APRs. The verdict is that Rocket Loans is a great choice if you have a low credit score and are interested in receiving your loan proceeds with dispatch. Application process very quick. You can find out almost immediately what you may qualify for. In other words, Rocket Loans is best for immediate use of a personal loan and at least fair credit. So it's a better way to get mortgage, refinance, or buy a home. Select the mortgage that fits your needs, Quicken Loans. You could see that it's a personalized result depending on how much you could afford. They'll even help you. How much of a home can you afford? How much is your terms? Are you paying it in 10 years, 15 years, 20 years, 25 years, 30 years? How much would be your monthly payment? Can you afford a $2,800? And then if you could, this is a home price that you can afford and the cash that you will need at the close. So they're really helping most Americans afford their dream house and really have so that they don't need to rent. So they need to buy a home through Rocket Mortgage. So congratulations, Rocket Mortgage is the largest home lender and has the happiest customers in the industry. The founder is Dan Gilbert. Actually, just by watching even just the first 5 minutes of this clip, you would see how impressive this company has done. And for most of us, because we're not Americans, we may not know this. So let me help you watch just 5 minutes of how Mr. Dan Gilbert is well known in Detroit.
This company's offering this, how come?
Try to watch how he gets.
So let me just say a word or two about Dan Gilbert before I ask him to come up. Dan is a very unusual figure in that he's succeeded in almost everything he's touched. He is one of the country's leading businessmen. He has built a company, Quicken Loans, which is now the largest mortgage provider in the United States, bigger than even Wells Fargo. And he started that company in 1985, sold it in not too many years later to Intuit, but bought it back. And now he's built it up to be the largest mortgage provider in the United States, also the largest online provider in the United States. It's also the largest employer in Detroit, largest minority employer in Detroit, and largest taxpayer in Detroit. And as we'll talk about later, Dan has moved many of the facilities of Quicken Loans right into downtown Detroit. And as part of what he's done, he has revitalized Detroit, now buying with his partners more than 90 buildings in downtown Detroit, rehabbing them and revitalizing Detroit. In addition to that, he's also a great philanthropist. He's one of the people who signed the Giving Pledge, committed to give away half or more of his net worth, and his net worth is fairly high. He's also involved in an enterprise that many of us know, the sports world. He's an owner of the Cleveland Cavaliers. They have a very good player on the team. I don't remember his name. LeBron James. And so he is not only owned the team, but he won the first championship that Cleveland has had, I think, since 1964, when the Cleveland Browns had beat my favorite Baltimore Colts. He's also become a very big investor in technology in the Detroit area and the Cleveland area, and has become one of the largest investors in the Midwest in the technology area. So he's also an author, and you'll hear later that the book is available to you. So he's an author, philanthropist, sports team owner, technology investor, and a great businessman. So we're very pleased to have Dan here. And Dan, why don't you come on up?
Sorry, they said to go the long way.
And he did all this while he had a law degree. Like many of us, he realized that practicing law wasn't the way to get great wealth, right?
I never really practiced, but I did entertain the Wayne State University Law School about 5 years ago in Cleveland. And I told the guy I don't know what happened to my diploma. And the next day it came Federal Express, my diploma from law school.
Did the president of Wayne State come the next day asking for contributions or anything?
No, he did that the first day.
Okay.
Yeah.
So I'm going to cut you off, but you can watch that. Dan Gilbert, founder and chairman of Quicken Loans Inc. and Rock Ventures. So let me repeat what he said. He is the largest employer in Detroit. Yes, he is LeBron James's boss. He is the owner of Cleveland Cavaliers. Yes, that NBA team that won championships. He owns more than 90 buildings in Detroit. And he revitalized them. Everyone in Detroit probably knows him. He is the largest employer, the largest taxpayer, all in Detroit. He's also the largest technology investor in Detroit. He's basically like Detroit's, you could say Detroit's president. And then he committed 50% of his entire net worth to be given to he pledged it to, I think, Melinda Bill Gates Foundation. So you can see that he's an author as well. He's a sports team owner. He's a very great businessman. People actually say that anything he touches always is successful. And that, that's Rocket Loans. Rocket Loans is actually the number one, America's largest lender. We're not talking about the number two, number three, number four. We're only talking about number ones. So we are Detroit. It's very happy to say that the Detroit people are so happy with Dan Gilbert. We are a Detroit-based company obsessed with helping our clients achieve the American dream of homeownership and financial freedom. We are committed to providing an industry-leading client experience powered by award-winning culture and innovative technologies. We believe our widely recognized Rocket brand is providing simple, fast, trusted digital solutions for complex personal transactions. Since our inception in 1985, we've consistently demonstrated our ability to launch new consumer experiences, scale, automate operations, extend our technology to partners, and our flagship business, which is Rocket Mortgage, is an industry leader, having provided more than $1 trillion in home loans since inception, while growing our market share from just 1% in 2009 to as high as 9.2% in the first quarter of 2020. That is a 10x move in the last 10 years, a CAGR of 19%. We also expanded into complementary industries such as real estate services, personal lending, auto sales. In each of these gigantic and fragmented markets, we seek to gain share, drive growth by reinventing the client experience. Dan Gilbert, our founder and chairman, has purposefully created a strong cultural foundation of core principles. So 3 years ago, he was diagnosed with stroke. And just a few months ago, he was healed. So I think one of the impetus is that Dan Gilbert felt that it was time for his company to do IPO, reward all the employees. And anyway, it's a very profitable company. And so we seek to gain the members love us and love our clients as well. They have been awarded 100 best companies to work for in the last 16 consecutive years by Fortune magazine. And of course, the launch of Rocket Mortgage is just 5 years ago in 2015. They revolutionized the mortgage process as the very first end-to-end digital experience, leveraging all the decades of technology investment and innovation. Rocket Mortgage is the simplest, most convenient way to get a mortgage. The digital solution automates data retrieval, advanced underwriting technology to deliver fast, tailored solutions at the palm of a client's hand through his smartphones. Now, our Rocket Mortgage app has a 4.9 star rating on the Apple App Store. You can interact with our team members, upload documents, DocuSign, e-sign your documents, receive statements, and complete monthly payments. So apply for a mortgage through the app. Rocket Mortgage Tech extends well beyond the app, of course. We can seamlessly serve clients and client-facing team members across our entire front-end user experience. Rocket Mortgage technology facilitates origination, underwriting, closing, servicing processes in a manner designed to sustain positive ongoing client relationships. We have also built proprietary sales tech, allowing us to more effectively connect and win potential clients. Based on this, we've also developed Rock Connections. These are sales and support organizations serving both Rocket Mortgage and our external partners. We offer our clients speed, simplicity, in the industry-leading automation, and then through our prop software platform and centralized operations. So Dan Gilbert is very famous. You could see that, Wikipedia said Dan Gilbert is the co-founder of Quicken Loans and the founder of Rock Ventures. He's an American billionaire, an investor, and a philanthropist. He's also the owner of NBA's Cleveland Cavaliers, and he's barely 60 years old. He's just 58. So amazing. A guy who happened to own everything in Detroit. It's a monopoly in Detroit. That is Dan Gilbert. And as you know, Quicken Loans is larger. It is the largest top US mortgage lenders. You could see JP Morgan Chase is 3.9% market share. PennyMac Financial is 4.8. United Wholesale Mortgage is 5.4%. Wells Fargo is 6.9. Quicken Loans was 8.1%, now hitting 9.2% market share. They think that they can hit 25% market share in the next 10 years. Their IPO price was 18. Last price last night was 22. So it actually went 30 plus and then fell down. And I think that now it's just the right price to learn about this company. I wasn't able to study it last August. So hopefully this October, the drop in price is something that we can take advantage of. A letter from Jay Farner, the CEO. So he said that numbers and money follow, they don't lead. That may seem like an unconventional, maybe even odd way to kick off the first page of an S1. But then again, if you ask around, you quickly learn that our company has spent the last 35 years becoming America's largest mortgage lender by taking the road less traveled. So they never did any they didn't have to suffer that subprime, if you remember the 2008 financial crisis, because they've always passed on the risk. The risk was never theirs. We invest for the long term and place tremendous value in supporting our team members, clients, and hometowns. So our company operates with 19 principles as key drivers known as ISMs. These deceptively simple fundamentals drive our decisions and are the heart of our entrepreneurial culture. One of those ISMs is that the numbers and the money follow. They do not lead. So if they have the numbers, the money follows. Our money goes to them, mortgages will follow them, and the numbers and the money follows. The fact that they've done what, $3.5 billion profit in a quarter tells you that they're profitable, the numbers and the money follow. You see, Rocket Mortgage is a name that is now synonymous with digital mortgage lending. It could never have been built if we took the short-term view, focusing on short-term profitability. We have more than 500 developers, designers, quality assurance technicians, business analysts working for more than 3 years before we could completely redesign the highly complex mortgage process into what we introduced in the world last 2015. So it took 3 years for them and 500 developers, designers, and so forth. What is this ISM that they talk about? Our ISMs, these have been our guiding principles given by Dan Gilbert. The ideals that we live by that drive our culture: number one, always raise our level of awareness. Number two, the inches we need are everywhere around us. Respond with a sense of urgency in the ante to play. Is the ante to play? Every client, every time, no exceptions, no excuses, obsessed with finding a better way. Yes before no. Ignore the noise. It's not about who is right. It's about what is right. We are the they. Take the roast out of the oven. You'll see it when you believe it. We will figure it out. Every second counts. Numbers and money follow, but they don't lead. A penny saved is a penny. We eat our own dog food. Simplicity is genius. Innovation is rewarded. Execution is worshipped. Do the right thing. Okay, so it's all about execution. We were blessed with the blueprints for this type of success. In 1998, Dan Gilbert pioneered the digitization of mortgages in America by penning a now famous email calling out the opportunity that the internet presented to consumers and lenders alike. Less than a year after that letter, we launched rockloans.com, centralized all of our operations into internet lending centers. This centralization and technology legacy created the opportunity that led to Rocket Mortgage. Revolutionizing the mortgage industry twice took vision and patience to see the process through. But as Dan always reminds us, building something great is messy. And so I'm proud to lead a 20,000 team members who love the messy, frustrating, difficult process of creating and are always eager to get their hands dirty to help our clients. This dogged vision towards the future is simply who we are. As we embark on this process of making a public offering, there's a few things I want you to know about our company. Above and beyond the strong financials that you will see in our S1, get up to close to how Rocket Company operates. This is what I want you to keep in mind as you read the document. So it's a long S1, and you will go through the S1 if we have time. And this is actually a very good, it's a good interview. It's about 5 minutes, so why don't we watch it? Even just the first 3 minutes. 4 minutes.
This company, I've always thought of this company as your baby. You started it 35 years ago. You grew it into this phenomenal thing. And I was really surprised when I heard that you were going to go ahead and do an IPO, because I wondered what you're missing. Is it the quarterly calls with investors you're looking forward to? Why are you doing this?
Well, Jay gets to handle all that, so I can't speak to that. But I will say that we just thought it was the right move for our company at this time. 35 years in, got thousands of people now working for the company, and they all are stockholders now, which is a great thing. Something we've always wanted to do. That's hard to do in a sub-S corporation, private company situation. But you can do it in a public. So we want to use our stock as currency and potentially acquire more fintech organizations and put them in the mold. So there's better access to the capital markets. And there's a lot of reasons. You probably know them all yourself, I'm sure. But we're excited about it. And if I could borrow a line from Jeff Bezos, we're in a get-rich-slow scheme here. 35 years in.
35 years.
Yeah. I can't take credit for that line because I heard him say that somewhere.
That's a good line, and it's definitely applicable here. And Jay, you're going to get the tough questions on this morning. You are the CEO. You're the ones who's going to be running things. The pricing came in below what had been anticipated, $18 versus the $20 to $22 a share, and you're looking at fewer shares, 100 million versus the 150 that had been talked about earlier. That brings the valuation down from, at the high end, maybe $3.3 billion down to $1.8 billion. What happened? Why do you think the cooler reception than had initially been anticipated?
Well, I would say that we're pretty excited about where we're at here. And as you know, this is an art more than a science. And so as we talk to our bankers and so forth, we put our best foot forward. And probably the most important thing, as Dan discussed, we've got 35 years in the business. So we're more focused on the next 5-10 years than any given moment in time. And so the investor base for our opening was probably the most important thing. And so we focused on that versus selling as many shares as we possibly could. So I think we're in great shape and more excited than ever about the future. You think about the momentum we've got, record quarters, record profitability, record growth. So this is a great starting point. Like Dan just pointed out, we're close to 9% market share, up from just 5% a few short years ago. So a lot of positive things happening. And as he always reminds me, this is a marathon, not a sprint.
Now, you guys are now the largest mortgage lender in the United States, eclipsing Wells Fargo, who used to be leading the way, JP Morgan, other big names that we know. And that's incredibly impressive. I think some of the questions that have been raised is, look, it's a cyclical business, and it's been so hot right now. Your revenue for 2019 was like $5.1 billion. But is there a point where it starts to look like a less rosy business because interest rates are already so low? Probably everybody on the planet's trying to refinance right now. Is there a point when that turns, and what do you do then?
Well, great question. Dan and I were talking about this. There's nearly $11 trillion worth of mortgages out there that are in the money, meaning ready to refinance. I think the capacity for the market is about $2.5 trillion. We're making up a good portion of that and continuing to grow each and every day. But Becky, when we think about our business, we think about the long haul, and as we come up with strategies to grow, whether it's purchase or refinance, cash out, we don't think about the rates. We don't think, is it going to be a $3 trillion a year market, a $1.5 trillion? We kind of just target a normalized market, and then we set all of our drivers to grow profitably, and that's what you'll keep seeing us do. So 35 years in the business, Dan's always said, interest rate is not the factor. Client service, great technology, those are the ingredients that are going to move you forward, and that's what we'll keep doing, and we'll keep grabbing market share. Our goal, 25% market share over the course of the next 10 years.
So actually, it was, I think, one of the best interviews. It was short but very succinct. They just essentially did the IPO to actually help their employees, as their employees have been the Rocket shareholders. And that $1.8 billion that they raised, 100 billion shares at $18, is going to help them sustain their financing, potentially acquire some fintech. And so that's what they'll use with the money for. You could, of course, refinance with low interest rates. You could see that their business is growing. This IPO is actually just going to help them, just help more Americans to actually refinance those loans. So a few things. Last September 9, 2020, Rocket Companies actually announced an offering of senior notes 2029 and senior notes due 2031. That's a 9-year, 11-year contract. And this is a proposal to issue and sell $1.25 billion of aggregate principal amount. The issuance, along with it cash on hand, will redeem all of its outstanding 1.25 billion aggregate principal amount of 5.75% due 2025 to pay any related fees and expenses. So even they felt that interest rates were so low that they could actually refinance their own bonds. Of course, they have revolutionized the home buying experience. It used to be in a traditional lending. One person will do everything. With Rocket Loans, you've got technology-enabled specialized roles. Instead of traditional paper, you can do completely digital experience. And instead of manual workflow, you can do a centralized prioritization and parallel processing, such that in the last 10 years, you could see that the Rocket Mortgage origination volume went from 25 to 145, and their market share grew from about 1% to as high as 6%. Now it's about 9%. They've been growing 19%. It's a 10x company in the last 10 years. So if you're thinking about get rich slow scheme, that's correct. The title for today is Rocket Loans. Rocket. They've been growing their market share. You could see that they are actually stronger than most banks, and they have really made their clients happy with their Rocket Loans. There's a question, is Rocket a 10x company? I think it is a 10x company if they grow from their current market share of 9 to really hit that 25% market share. Because at the end of the day, it is just like a bank. In a way, right? If you think about it, it's a fintech, but it's also finance. Adjusted EBITDA. So there are some people that says, how could this be a tech company when it's just like a bank? They just do loans, and their earnings are adjusted EBITDA tells a more optimistic story, and the current share price is implying a significant increase in profit. So some people are saying that, why should I pay 40? Because currently it's about $45 billion market cap. Why should I pay for them? But I think the reason why you should is because of this. The non-banks actually rule. The share of mortgage originations that are by lending type, the non-banks are 54%. Millennials, the people in the world today, know how to buy a home. They do it through Rocket Loans. They don't go for JP Morgan Chase. They don't go to Wells Fargo. Remember that. So you don't invest in dinosaurs. Think about it. Large banks falling their market share from 50 to 22. Small banks going down. Credit unions going down. This is the reason why Freddie Mac and Fannie Mae had to be bankrupt. They even had to have a Federal Reserve bailout. So I think like the past is the past. The future is Rocket, RKT. The truth is, well, Rocket is not the future. They've been here 35 years. They just went IPO this year. But they were always the best in their game. They are the largest lender after all. Dan Gilbert led the reacquisition of Quicken Loans from Intuit. So Intuit is a SaaS name for those who are aware. Intuit is INTU, does accounting, a lot of work in that. So Dan Gilbert led the reacquisition. And then in-house realty was formed and FHA product was launched 2007. They grew their market share 1% even during a financial crisis in 2008 and 2009. They had 0 subprime loans. Significantly, they entered the mortgage servicing business 2010. They became number 2 largest retail lender in 2014. Rocket Mortgage was launched 2015, late 2015. They said it here 2016. They became the largest retail lender by 2017 in just 2 years, became number one. And then as of 2019, they had a record number of originations with greater than 75% growth from 2018. Is going to go more mortgage originations, and a lot of financing is happening and switching. So ever since rocketmortgage.com was created, take note, these are the level of loans that's been happening, 18.2 to 59.4 to 73.8. People are saying it's profitable, but it is very expensive. Then again, how many of us actually felt the Zoom video was expensive at 63 and 88? But a great product is something that we don't ever say no to, aren't we? We don't really care if people say it's expensive. As long as it's profitable, we buy the number one, we buy the Michael Jordans, we buy the Cleveland Cavaliers, we buy champions. We don't buy losers. We don't buy dinosaurs. Awesome 10X thinking. So Rocket Company's tech-driven approach has driven superior efficiency. It has driven higher margins. Or is the company just another wherein profits will rise and fall with interest rates? This is an article by someone, and he believes that it is expensive. So I'm sharing to you the bull side, the bear side. So the bear side, so he says, the bearish side says that the non-GAAP picture presents a rosy picture. In 2019, they had $145 billion in originations and had a 9% market share. And of course, the company says they can go to about $1 trillion. They can 10x that mortgage refinancing in the next 10 years. So despite the rapid top line growth, the company's core earnings are trending in the wrong direction. They're saying that the earnings are falling from $613 million in 2018 to $44 million in 2019. However, what's really happening is that the company is doing a lot of EBITDA, right? The core earnings are low, but they're doing a lot of investments as well. So adjusted EBITDA masked the falling core earnings. In 2019, adjusted EBITDA excluded $790 million in the change in fair value of mortgage servicing rights, which are largely dependent upon interest rates and prepayment speeds, $40 million in non-cash based stock compensation expense. So this is the bearish take that the company was hiding. Quote unquote, this guy, the writer of this article is David Trainer. You can read it. Rocket Company is profitable but still expensive. So he's arguing about the gap. And he says that despite the company being a market leader in a $2 trillion market, yes, the market origination TAM is large. It's about $2 trillion. The question is, it is a highly fragmented with the top 5 only accounting for just 17% of the market. The fragmented market allows a provider with a unique and simple approach to gain market share. I think that is wrong because in the last 5-10 years, you could see that this company has not been given a competition by the other large banks and the small banks in return. So that I would refute. Rocket Mortgage went from 1% to 9%, so he cannot deny the facts. It is a middleman, so they provide less exposure to risky loans. That's something we like, actually. So can you imagine a bearish take, and we are still bullish about the title? As an originator, the Rocket Companies operates a light business, holds little credit exposure than a traditional lender or bank. That's great. That's what we want. The firm originates mortgage loans. They sold to government-backed entities or to investors in the secondary market. The firm notes that most sales occur within 3 weeks of origination, in turn requiring minimum capital. If you ever wondered how Dan Gilbert ended up owning 90 buildings in Detroit, he would have been one of the investors in that secondary market. Let's say you had a building and you wanted to mortgage that building. In the end, that if you can't pay the loan, that loan will become collateralized, right? And the end of the day, the owner would be Dan Gilbert. He just revitalized your building, and he ended up owning more than 90 buildings in return in the last 35 years. The firm's focused capital light approach to lending drives Rocket Company's 19% return on investment capital, which is well above its online lending peers. Lending Tree, which is just 7%, Rocket Company's ROIC is also higher than largest banks. JP Morgan, Bank of America, Wells Fargo, Citigroup, with which it competes for mortgage origination businesses. Rocket Companies takes on less credit exposure than traditional lenders because it sells all the loans that it originates. So they don't own it. So it could be a bank that will buy that loan. It could be an investor buying those loans with the collateral as the house or the home or the building. So we do not have a direct credit exposure to the servicing portfolio since we do not own the underlying loans that are being served. So despite earning a higher ROIC and minimal credit exposure, Rocket Companies will still depend on interest rates to drive the business. So they're still interest rate sensitive, just like all banks and just like all their peers anyway. So of course, no amount of automation and efficiency could remove Rocket Companies' dependency on low interest rates. Low interest rates will make purchasing a new home more affordable and increase the number of consumers to refinance existing loans. That's why Rocket Loans right now is having a booming business because interest rates are near zero. The latter is more important to Rocket Company's business as only 27% of the firm's originations in 2019 were the clients purchasing a home. Rising rates would make it economically unfeasible for many customers to refinance their loans after the recent period of record low interest rates, and the firm recognizes that as much. It is said in their filing. So if interest rates rise and the market shifts to purchase originations, our market share could be adversely affected if we are unable to increase our share of purchase originations. That said, they talk about so many risks, but I think those risks are muted and it's actually an industry default. So let us review the S1 filing. This is the S1 filing. Let's take a look at how good this company is against the industry. Client leads by the year in millions. So you've got growth, 80% since 2014. So even in just 3, 4, 5, 6 years, they've already doubled. You could see the technology and data. So they had interaction. So let's read this. Our cutting-edge systems had allowed us to interact with over 20 million prospective clients. That means in 1 year, 200 days, 300 days, how many clients do they have? So 100,000, so 1 million per month divided by 30, that's how much they process in a day, thanks to automation and digitalization. So we have long-term mortgage servicing relationships, approximately 1.83 client loans. Our tech, data, and science teams are very proficient, leveraging this rich data to streamline our client experience, offering products to each client's circumstance, client leads, so 11 to 20 million. They are a very digital-first brand in terms of marketing. They've invested and made it so efficient, digital-first. So they're not like a bank. They are not they're not banks. So it reminds me a little bit of what? Square. Because some people think that Square is what? A payment game. But Square is also a bank. Square is also a bank. And Square is like 10, 15 times. Like Square went from $10 to $160 in what? 5 years? So is Rocket Loan at 10x? If you ask me, is it going to go $100? Maybe in about 10 years. Give it 10 years. Yes. My answer is yes. So we have over 250 experienced marketing team members and our in-house advertising agency. They don't have a lot of offices, but they do have buildings, of course, since Dan Gilbert owns 90 buildings. We create and execute innovative marketing strategies to identify and reach target audiences, engage with interested clients, promote the client experience. We also rely on our core digital media business, a leading online marketing and client acquisition platform generating additional leads. Since our inception, we've invested over $5 billion in marketing, over $900 million in the year ending December 31, 2019. While we are increasing our brand awareness, there is no better brand builder than a positive client experience. So they understand the word of mouth, positive clients, positive customer feedback. Coupled with our award-winning service over the life of the loan, we have established a long-term relationship with our clients. Servicing a client loan allows us to remain in contact with the clients and stay current on their financial needs. Example, we rely on insights gained from servicing to offer solutions to clients when they can benefit from a more cost-effective mortgage. So I know that they sometimes actually help their clients to just refinance because the mortgage rates right now are low. So if the client can save $50,000, refinance it, just as they did. They refinanced their own bonds, their own senior offerings to a lower rate. So when clients choose their next mortgage, they actually have a higher client retention levels of 63%. Refinancing is 76%. This is approximately 3.5 times higher than the industry average of 22%. In 2020, our year-to-date average has grown to nearly 75% of overall client retention. So this just tells you how happy people are. If there are 3 times more customers renewing and refinancing, just tells you how great the company is. Therefore, they have a superior economic model. They have a superior business relationship with their customers. It is a moat. It is what we call a moat. Our business is high velocity, capital light, and cash generating. So what does it remind you? It is a little bit like an Airbnb, right? But they are doing the middleman. They're helping process. It actually reminds you of companies like Lemonade as well, in a way, right? I don't know if it a bit reminds you of that, but sometimes it does. Like some awesome 10x picks just pop up when I study a company. Our business model is high velocity, capital light, cash generating. We originate mortgage loans that are sold either to government backed, so we already know that. For the year ending, our net income is $900 million. Our adjusted net income is $1.3 billion. They actually might give a dividend this year, so they actually have cash. Highly adaptable and scalable platform. Our scale, together with our high quality, geographically diverse originations and efficient platform, can achieve superior secondary market execution. So high quality team members experience. We received it from Fortune magazine, from Phoenix, Cleveland, Charlotte as the top workplaces to work on. Approximately over 1,500 team members have been with us for over 10 years. Strong senior leadership, so you already knew the growth, and you already saw the site visits. So very strong site visits can become clients. So if you've got 70 million client visits in the website, 20 million actually became a real loan. Mortgage network should generate significant growth. So let's see, the system substantially have growth opportunities. There's about $100 billion approximate annual sales in the real estate market, approximately $162 billion in personal loans, around 40 million units in the US every year, and about $761 billion in terms of annual mortgage originations in Canada. So they're also in Canada right now. They say that their total addressable market is at least $5.5 trillion. So they have actively created a number of businesses in which they have their core strengths. AmRock is a leading provider of title insurance services, property valuation, settlement services in the country. AmRock uses proprietary technology, integrating seamlessly with Rocket mortgage technology and process. They've already facilitated 444,000 settlement transactions in 2019. This is something that only digital can do. Rocket Homes, which is an online home search platform and a real estate agent referral network. We provide ancillary services around the real estate point of sale. According to the Consumer Federation of America, the real estate point of sale market has approximately $100 billion of annual sales in the USA. So if you're buying a home and Realtor.com is a website, chances are those homes will all be Rocket loans, Rocket mortgage loans. Core Digital Media is a top digital advertiser in the mortgage. They generated 6 million client leads in mortgage and other industries. This business enables offering us an insight, improving our conversion rates to online leads. We also leverage core digital media and cross-marketing our products to clients across the ecosystem. Rocket Loans is big, personal loans. So in terms of Rocket Loans, that means they're going to compete with the banks. They're also going to compete with Square Capital. If you're not aware, PayPal and also is going to be a competitor because PayPal through Venmo is also an awesome 10x pick, guys. I mean, we know this because we study these businesses. So it's okay. Like the personal loan is a big market. And if they want to all give you loans, why not? You can borrow money from Rocket Loans, personal loans, unsecured loan origination business in 2016. The personal unsecured lending market has approximately $162 billion of outstanding balances, which have grown at a compounded 16% annual growth rate since 2016. So Rocket Auto, they can also do this. Of course, Rocket Auto will be also a loan. So if you are buying a car and you can't pay for that car, they can do loans for you. So approximately 40 million sales in 2019. Lendesk is their very first geographic expansion in Canada. So they're also the same. Lendesk is a startup offering a suite of products to digitize and simplify the Canadian mortgage experience. So chances are in that $1.8 billion, they said that they're planning to buy a fintech. So we don't know what that fintech will be, but chances are it's going to compete a little with, I guess it will compete with their Squares, with their PayPals, which is fine. At least we compete with the fintechs of the best leaders of the world. Edison Financial, our second investment into the Canadian mortgage market. Edison is a digital mortgage firm that will use Lendesk Spotlight as its lender submission platform. We believe that our success in the USA can be leveraged in the Canadian mortgage market with approximately 760 billion Canadian of annual mortgage originations. So how did they do in the COVID-19 pandemic? Okay, so they actually made a great 100% growth. So the quick answer is that yes, they made so much money. So you could see just a short thing, negotiated $3.75 billion of increases in loan funding capacity with our current lending partners. They achieved record EBITDA, reduced the return times on origination to record lows. They stepped up verification of key metrics such as employment, income, ensuring the highest quality underwriting standards are maintained. So they're essentially like a bank. It's a digital mortgage lending, right? You can read more about them. How did they do? You could see their cash and cash equivalents, their funding facilities, their financing. So you could see all of that. Actually, just study this one. Oops. So yeah, so it's all in their S1 filing. So it's all here. You can it's already 6:30 and I will end my presentation with maybe a video on the company. Let's see let's try to understand what real estate agents are saying about, of course, the market, so you can understand more. Even if I talk a lot, I hope that you still do your own due diligence. Remember that Awesome 10X, you still do your own due diligence. Nonetheless, I think that a 3 to 5% stake is fine. So if you have a $10,000 portfolio, 3% is $300, 5% is $500. At 23 all the way till 18, so try to average a $20 price. I think that you'll be fine. Okay, so you could watch many videos by yourself. This one, current state of real estate, Quicken Loans. Let's watch this. Last 5 minutes. Play. Bill Banfield has 25 years industry experience, and he's a vice president.
Still employed and still working their hours and making the money. And gosh, self-employed clients, this is a tough one, right? Because most self-employed clients filed their 2018 tax returns, but many have not filed their 2019, and trying to understand what has happened in the last couple months related to self-employed businesses and how their income flow is happening is a difficult documentation process. So I'm not trying to single out self-employed, but employment in general. We've now, in the last 5 reports, we have 26 million people that have filed for unemployment claims. And that number is going to continue to go up. So the question is, how quickly does the economy bounce back? Or is this going to be a prolonged recovery recession? And how does that impact ultimately what we all do for a living, which is who's eligible to get a loan? What are the credit standards that we need to consider? And how do we document that?
Yeah, I just helped my neighbor navigate a refinance, and he's self-employed. And there was a couple extra things we had to do, but we still closed inside of 30 days. So I was impressed there. If I'm an agent, I'm working with some clients right now, and I know that some lenders are choosing to lock rates. Other lenders are floating until certain points in process. Others are floating all the way to close. How is that decision made, and why is that occurring? And if I'm an agent, should I be concerned about that, or is that kind of par for the course these days?
Yeah, well, I think, if you go back into mid-March, all of us were scratching our head going, what in the world is going on with this market? It was bending and twisting, and relationships between the 10-year Treasury and mortgage-backed securities, everything was out of whack. When the Fed stepped in, they started to create the liquidity in that market, takes the sand out of the gears, things started to heal, and rates dropped quite a bit. At the same time, you had governors in 45 states over a period of time issue some form of a shelter in place. And when you take a look at that, it's uncertain. Will borrowers react the same way? Will notaries and appraisers be able to get in homes or not? So some lenders, including us, said, look, since we don't know, what we really want to make sure we can do is under promise and over deliver. So we said, look, we're going to continue to take applications in all 50 states. We'll get a client to a certain point in process when we know those vendor items are back, and then we'll lock the interest rate and we'll move on. The good news is, at least for our clients, is that as the Fed bought all these MBS and drove rates down, now that we're locking those clients in for closing and now beginning to lock earlier in the process at application, it's making it easier for people to lock in at today's low rates. So there's a lot of different reasons. For us, it was the uncertainty around the supply chain and mortgages, and other people might have had different reasons. But for us, we're happy it worked out well for our clients.
And now we're locking sooner than ever before. So that's a great point. You did mention the Fed driving MBS rates down. So let's transition over to the market really quick, because I'm watching TV and it seems like the stock market seems to be doing better and better and better, but interest rates seem to kind of be staying flat. That's a rarity for me in my 15, 16 years here in the industry. What's causing that? What's happening there?
Yeah, I think you can see like the stock market loves hope, right? And when you start to hear that maybe some of the people getting sick is peaking and maybe dropping down in some places, you're seeing hope that we're going to get through this. More and more, there's more talk about opening states back up, getting the economy going again, and that spurs activity in the stock market. When you move over to the bond market, the fixed income market, it is dominated by the Fed. And there's a saying in the financial markets, don't fight the Fed. Every single day, the New York Fed is going in and they're buying mortgage-backed securities, amongst other things. But since we're in the mortgage market, let's just talk about that part. They started out buying about $50 billion a day, and that's what drove up bond prices, which interest rates move inversely to price. And since then, they've started to dial that back. They're in the $15 to $20 billion a day range, but that's still a massive amount of liquidity being put into this market. And so that's why you're seeing rates stay low, even though the stock market is going up. And so they're moving in different directions, largely because of the Fed's activity within the bond market.
Okay. And I'm hearing a lot of people compare, when you talk about, the Fed being involved in the purchase of the bonds, a lot of comparisons drawn back to 2008. Can you speak a little bit about what the differences are or some of the similarities between the credit crunch of 2008 and some of the things that we're seeing right now going on in the market?
Yeah, I'm lucky. I've got a team of some seasoned professionals, and a lot of us were around, when long-term capital management and the Russian default happened in 1999, 98, 99, and a couple of bumps along the way. Of course, the crisis 12 years ago. So a lot of these things, what do they say? History doesn't repeat, but it often rhymes. So I'm happy that we have a team of folks that are experienced that can make clear decisions, try to roll out plans that aren't overreactive. But I think one of the big differences is in 2008, we had a run up, let's call it a bubble in home prices. So there was an asset bubble that drove that. And then when you couple that with substantially different underwriting guidelines at that time period, you had weakness in the credit profile and an asset that was prone to prices falling. And that's what we saw, right? And then you had a flood of foreclosures. This time, what's interesting is, so yes, employment, I think, is a top issue right now. But home equity levels in pure dollar terms has never been greater. Every single year, if you have a 30-year mortgage, you're paying down your balance by 2 to 3%. And people have had fully amortizing loans now for a long time. And you add into that the full doc credit standards that apply today. Again, that equity position and property appreciation that has happened. We're in a much more stable place from an asset perspective. The home prices are much more, even if they fell a little bit, we're in a much different spot. But employment is going to be the thing. Can people, even with equity, can they afford to stay in their home and make their mortgage payment? And so I think that's something that's going to unfold for all of us. It's really quite uncertain where it's going to, how long it's going to take to get through this.
It is an interesting comparison to see that equity positions for the average American are higher, and FICOs on average are higher. People are in a better spot, which is good to see. So hopefully that allows us to weather the storm, to your point, a little bit better. Now, if I'm an agent, I'm working with clients who are trying to get their homes listed for sale. I'm trying to make deals happen. Where do you see the inventory of housing going? I mean, inventory seems to continue to drop week after week. I mean, maybe we're starting to crest, who knows for sure, but when do you see that coming back, and where do you see that that's going?
Yeah, well, so the most recent reports suggest inventory continues to drop, at least when you look at a year-over-year level. With less homes on the market, usually that would mean prices remain stable, if not go up, because there's more people competing for fewer homes. Look, I don't mean to keep deferring this to the virus, but when you look at other countries where they're starting to come back online, it's not like every single store is open and they're hustling and bustling. Life is different still in those places, and it's going to take a.
So I'm going to stop that video. You can watch it for yourself. Just go to Agent Update, Current State of Real Estate, Quicken Loans. Of course, subscribe to Quicken Loans so that you can watch all the videos, building client relationships, winning multiple offer solutions. You can watch so many videos thanks to Google's YouTube. That's really one of my primary, every day I do research, right? So of course, I interact with YouTube and Spotify and Google search engine every single day. So I'm genuinely bullish on these companies that I use and love and make money from. So to end this note, I want you to understand Rocket Loans, Rocket Company, RKT. Learn more about the company. There's a lot of reasons why I think that it's got two reasons why you want to buy it. I think first and foremost, you have to understand that people are locking in and refinancing now that you can refinance and fix that loan to about as low as 3%, 4%, 5%, 7%, really depending on how low your refinancing rates would be. And it really depends on your credit score as well. And then of course you could see that we want a company that is what would be the risk. So actually, I'm sorry, it's not two things, no, but you could see that the risks would really be the changes in interest rates, which the U.S. Federal Reserve kind of said that it's going to take a long while and they're not going to raise rates. So, of course, the ability to sell loans in the secondary market, it is good. What he said was that the Fed was willing to buy the mortgage-backed securities. So the government-sponsored enterprises, the Fannie Mae's, the Freddie Macs, are securitizing the loans into MBS. So the Ginnie Mae, so those are the buyers of the mortgage-backed securities. So of course, this is a home. You would say that buying Rocket is in a way a recovery play on housing. If you ask me, that is really how you play Rocket Loans. Therefore, the more people buy homes, the more chances that Rocket Company should rise and it will spur a rise. So you ask your real estate agents, and they'll be saying to you that Rocket companies, i.e. mortgage, would only increase if you are buying a home. So that's it. Thank you very much, guys. And this is a leverage move in a way, because at the end of the day, Americans would love to own a home. They don't want to just if they could, right? And they would want to purchase that home through a mortgage. Okay, that's it. Hope you had a great dinner. Hope you had a great day and have a good dinner. Bye-bye. See you again. Thanks.